I know why you're here. You're searching for a holy grail in the market. You want to be successful. You want to earn money from the markets and become financially free. In your conquest, you're searching the internet, books, everywhere for one holy grail which can give you consistent income. But let me tell you this. What you see on the charts is not the market, it's yourself. That means these are all emotions which are visible on the chart. Emotions of all the human beings who are trading the market. So first thing is you need to understand yourself better. The moment you start trading, you see your reflection in the chart. That's how you react. So it really shows what kind of a person you are in real life. How disciplined are you? If you are consistently making money, it shows that you are very disciplined in everything what you do. But if you are losing money, there is something which you need to work on in yourself. That's your psychology part. Good morning, good afternoon, good evening. Welcome to my channel. Today we are going to analyze Bank Nifty and we'll pick up some stocks for a portfolio, and also we are going to discuss a strategy which you can do on a weekly basis and leave it for expiry, which has like close to 100% success rate. So let's get started. Yes, now we are on Bank Nifty chart. So this is a trend line which we have drawn a couple of weeks back. So as you can see, the monthly trend is still bullish. We can see a retracement happening from these levels, and the candle was supposed to be closing above this. Would have been a great sign, but yes, it has formed a topping tail, but there is no volume, as I said in my last video. So you can see this is also a small green candle which is forming for this month, and you can see the movement is towards up. So let's see how it is going to be the next week. So next week, now let's draw a few lines so that we can understand this better. I'll tell you what I'm drawing. If you can see, these are all 50% body candles, if you are noticing. From the week of 22nd June, 29 June, then 6 July, 13 July, 28 July. And this was one different candle, this was a leg candle. So the body was big, but again a 50% candle. So you can see all these are forming 50% body and 50% wick, which shows that market is not clear which direction it has to take. So it is still in the same zone. So that is why this is our zone. We have to wait for a breakout to happen either upside or downside. As of now, if we see 200 period moving average was coming down, but now the price is resting on the 20 period moving average. This is our 200 period moving average. So this acts as a resistance now. This is a very strong resistance for us on a weekly time frame. So yes, it has to give a breakout. I would feel that this is going to be there in this period for a little longer time, but you also need to factor that September and October months are festive seasons for India. So usually the market rallies up, and after the festive season it starts to drop. So we have to keep that in mind, and let's look at this on a daily time frame. On a daily time frame also, these levels which we have drawn on weekly, these are intact. So the market is like going up down on these levels. So the levels which you can buy, the levels at which you can sell, buy, sell. buy. You can see the now next move can be till here, because this is the one zone, and it can further move up. There is a scope that it can go up till 25,646. 25,646 can be a level where it can reach if this breaks out from here. And then again you have a resistance at 25,000, so you can expect some kind of retracement. But if we draw a trend line from here, or let's see from here, so this is a trend line which is visible for this. This is actually a channel which is forming. Are you able to see the channel? Yes. So is it clear now? This is moving in a channel on an upward direction. Whether the channel has to break, then we can say the market has gone bearish. If it breaks upside, it is bullish. So till that time you can find entries near the spots or near the 20 period moving average, so that you can benefit from the movement. So this is clearly visible on a daily time frame. Let's look at it from a 15-minute time frame perspective. So Friday, this was the market for you. So it went above 200 period moving average, and you can see any stock which is crossing 200 period moving average on any time frame will face a resistance and started falling from there. But since there is a lot of support on buying part, the market didn't go further down. Whenever it touched the bottom, market rallied up. Touched the bottom, then it rallied up. So we are expecting the market to stay bullish for a little more of time. On 15-minute time frame, you can see that there is a crossover happening for 20 and 200. So this is the reason I have created a bullish position. I'll show you what positions I am holding right now. So I am holding these two positions. Bank Nifty, these numbers you see on the weekend will not be right, because the market is closed. The market is exactly here in my profit range, but there is still time to expiry. So I'll teach you how to do this today. So let me show you by making a fresh position so you can understand this. Let's go to option strategy builder. Have you guys seen this new option chain, NSE option chain? It is available on the new website, because old website I see a lot of issues coming up. A full option chain is not visible. So use the new website and new option chain. So let's look at Bank Nifty, 13th August. Let me refresh this. Let me put it in a best view. So now you want to take a neutral position. You want to carry it for the entire week. So what you can simply do is, you can make a butterfly on both sides. That means we can choose this strike, this strike, this strike. So you're actually making a 500-point butterfly here. Okay, so let's get started. 21800. So we select Bank Nifty here and we do 21800 call. We buy one, and next strike is about 1 2 3 4 2 and 1 2 3 4. So 22,300, 22,800 calls. So let's go here. 22,300 call is what we sell to quantity. and 22,800 call, we buy one quantity. Okay, so don't be in a hurry. I'll show you what I'm doing. So this is going to be your butterfly. That means you are expecting the market to go up in this direction. So that is the reason the market is currently here. You're making a butterfly here for next week, so that if market moves into this zone by expiry, you will have this kind of a profit, which is a 9,700. Okay, now what if the market starts to come till here and goes back? How do I save my position? So we will add a little more to this. So we go to the option change, then we see 21,900 put. Okay, we will see this. 1, 2, 3, 4. 21,400. One, two, 21,401. So we have to take this and this. Let me do a fresh thing. 21,900, 21,400, 2,900. 1, 2, 3, 4. This one. Where is this? Okay, clear? So let's go to option chain. Yes, so we add 21,900 put here. We buy one lot, then 21,400 and 21,000. 21,400 put, we are going to sell 2 quantity, and then we have 21,000 put, we buy 1 quantity. Okay, so this is how your position will look. Did we take it right? Let's check. 1,900. 1, 2, 3. $21,400. 29. Let's do 29. Instead of 21,000 put, we are taking 2,900 put. Okay, so now it is balanced. As you can see, this is like an M pattern. Okay, so you are giving a range of about 21.99 till 22,602. If you want to reduce this risk also, but this is not a risk, as you can see, PNL here T plus 0 is just 28 rupees. So if market expires anywhere in between, it will be 2,454. But if you want to reduce this risk, you can take the same strike, 21,800 put here, 21,800 put. $21,900 is better. Okay, so the peaks are same, and we have a position at 21,700. Okay, so we have made a 500 point butterfly on both the sides. So you will get up to close to 1,000 points difference. 21,099 minus 22,602, so it is about 1,500 point range. So this entire thing is about 1,500 point butterfly. So 1,500 point butterfly is what you're making, and you're leaving it for the week to expire. So as the day passes, like every Friday you make this, and you close this on Thursday. Only one thing on Thursday morning you have to do is just convert your normal positions to MIS. so that it gets squared off along with the market. So there won't be any possibility that if any of the strike goes into the money, then also you'll not be in panic that what charges you have to pay if there is a settlement. So always on Thursday, that means on Friday you take this position, and on Thursday morning you convert this to MIS. Cool. So this is how you can do. What is the risk you're having? Your risk you're having is 4,954. Your profit is about 7,500. So now, why do we say that this strategy is good? Let me show you that also. See, this is up to you how you can improvise this. You can make it much better. You can try to do that by changing the strikes and playing around with this tool. You'll be able to get a better position. So why do I say this is a better thing? Because let's look at the weekly ATR of Bank Nifty. So this is Bank Nifty chart, which I'm having it here. So let me put ATR here. Okay, so this is our ATR. I will remove RSI for the moment, and this is a daily chart. So let's go to a weekly chart and try to understand what is the weekly ATR. So here, if you can see, got it guys, yes. So here you can see our average for this week is about 905 points. So what is the range we have taken? We have taken a range of about 1500 points, 1502. So we are safe, and we can ensure that whichever direction the market moves, either this direction or this direction, we will be in profit. Our maximum profit will be 7,500. That is with 111 lot. Okay, one lot, that means 2 lot you bought, 2 lot you sold, 2 lot you bought, 2 lot you sold. So this is how you have to manage. If you are increasing the quantity, the reward will be much higher. So this is the safest bet. If you are a working professional, if you are in a job, you can't spend much of a time on the chart, just do one position on Friday afternoon for the next week, this position, and leave it to expiry, and Thursday morning you have to convert this to MIS. That is the thing you have to do. So this is about this strategy, and let's call this strategy as M butterfly, and let's move and see if we are able to find any stock for portfolio. So what do we use here? We use charting, and we go to our dashboard, scans, and monthly super trend. Okay, so last week here we have changed it to weekly. So let's see if we have found any stocks. This is on the cash segment, so we change it to futures segment and run a scan. So we have got SRF, Apollo Hospital, Maruti, Bharat Forge, Tata Steel, Mindtree. So let's see and analyze these stocks. So we have SRF, Apollo Hospital, SRF. So we have added these stocks here: Mindtree, Tata Steel, Bharat Forge, Maruti, Apollo, and SRF. So let's analyze Mindtree on a daily time frame. Is it a good point to buy? I would say no, because it is forming a double top pattern here. See, it is already at this level, so there can be a retracement down. So we have to wait for this level to enter into this stock. So this is a no for us right now. Then let's go to Tata Steel. Tata Steel looks really good. The price is above the 200 period. Price is moving up, so this can go up till here, till this levels. So definitely you can buy and keep adding if it retraces. So this is in a good uptrend, so you can buy this. So this is a good okay for us. So Tata Steel is one, and let's look at Bharat Forge. Bharat Forge on a daily time frame is about 200 period moving average. Let's look at this on a weekly time frame. Weekly time frame, it can go up till 468. Okay, so this is also a good stock right now to buy, because even this can go up till here. This can be a target, this level, so you can take an entry. So Bharat Forge is also okay for us. And the next stock is about Maruti. Maruti is also in a good uptrend. In a weekly time frame, it's about 200, closing about 200. So this is also a bullish. This is good, this is good, this is good, yeah, for us. Then let's go to Apollo. Apollo is at a resistance level here, not a good thing to buy. So let's wait for the retracement. Okay, so this we are going to ignore. SRF, if you look at the pattern is so bullish. You can easily see the price is getting retraced from its 200 period moving average and taking a bounce on every touch at 20 period moving average and going up. Because this is at a good state now, this can be a level where there can be resistance. So wait for a pullback and buy here, but this is definitely a buy. So this is a no, this is a no for us. The stocks we have found is Tata Steel, Bharat Forge, Maruti and SRF. These four can be added to your portfolio for the coming week. When I say portfolio, it has to be on a weekly time frame. And when do we exit? We exit whenever we see a super trend on a daily time frame, candle closing below the daily super trend. That is where you have to exit and find some other new stocks. So invest small amounts, invest in little quantities and keep riding the trend. So that's it guys, that's it for this week. Thank you so much for watching, and do keep sharing my videos with your friends and families, and learn the market with me without paying a penny. Thank you so much for watching.